Hello, good afternoon. You're tuned into ET now, and this is Closing Trades. I'm Anisha Jain. With me, Saisha Faridi. And for now, the market continues to tumble. During the trading session, there was a bit of a green, and we got excited that perhaps the worst is over. But no, that's not the case. In the last 30 minutes, there's that acute selling pressure which is back in the market. We're holding on to 23,400 somehow, but it's the likes of Shriram Finance, IndusInd Bank, Adani Enterprises, BEL, which are actually putting pressure on the market at this point of time. Bank Nifty continues to be the sore loser in the trading session. Acute underperformance there. That index is down 1.5%, almost a 700-point slide coming in as far as Nifty Bank is concerned. And now Rupee has also taken quite a bit of tumble. In fact, Rupee is very close to that 86 mark. The last time I checked, Rupee was around 85.94. So just 6 paisa away. There you have it on the screen. A fresh day and a fresh record low is what we have been hitting on the rupee. So very close to that 86 mark. One day there was a reversal after many days of decline, but we have resumed the downtrend on rupee as well. Weakness there as well. In terms of the individual names, IndusInd Bank down 4%. That Goldman Sachs downgrade is something that is weighing heavy on that stock. PNB, Canara Bank, IDFC First Bank. These are the ones which are in the red. So down anywhere between 3 to 5% at this point of time. But Aisha, from the broader markets, I think more or less it's a sea of red per se, because not many stocks holding out, and overall the advanced decline ratios is also not looking very impressive.
Oh yeah, not impressive at all. In fact, you've got a count of 166 standing to the declines, and look at the pain and the kind of cracks that you're seeing emerge, reacting to news flow and earnings. Case in point being a Tata Elxsi. 7.5% is the crack that you're seeing on the stock right now. There's REC, which is down 6.5%. Paytm is down about 6.25%. There's of course BHEL, which is also down about almost 5.5%. And one can really go on with the list of losers. But let's try and understand what's really going on in the market, and how is it that you should make sense of all the news flow. We've got Anshul Saigal as well as Kunal joining in on the show right now. Kunal, the volatility continues. What levels are you monitoring now on the index?
Yeah, I think in this kind of a selling, it's very difficult to try and look at levels per se for the indices, because we managed to break below the critical points for the Bank Nifty. We were trading at a band just about that 49,500, 49,800 for the Bank Nifty, but today we've managed to break past below those levels of 49,400, 500 as a key support zone on the lower end. So I think that generally indicates that the weakness would now start to just about accelerate for the banking index. The concern for the markets today could probably have been exaggerated had it not been the IT index, which is still looking quite strong. There's been a very strong comeback from large cap IT names, and so far it's been durable throughout the day, right from the start, with the likes of TCS, Infosys looking quite charged up, and then you have the other large cap names and few of the mid cap IT stocks which have looked quite interesting and strong. So as of now, it's just that the sell-off in the market continues. The advanced decline ratio deteriorates. 23,200 still remains to be a key support for the index, but looking at the way the sell-off is accelerating for indices as well as for individual stocks, it could just be a matter of time that we may break below those levels also.
Yeah, but for now, there is a bit of a tumble on select names. So Tata Elxsi, of course, the earnings were weak. It's down 7%. IREDA, there was a decent amount of growth, almost 36% on the top line. Some of the NIMs and spread ratio did also improve, but the stock is seeing profit booking. REC is also seeing profit booking. You have Paytm down 6.5% right now. Piramal Pharma, Aegis Logistics, Shriram Finance, all coming under quite a bit of pressure. Shriram Finance being an index stock down about 6% right now. On the gaining side, Ramkrishna Forgings is surprising, an 8% move. And of course, TCS has put the rest of the large cap IT in a great space. So gains of anywhere between 2 to 6% there. But Anshul Saigal also joins us on the show. And Anshul, the question is, did the TCS number really warrant a 6-7% move? Because there was a bit of a top line miss. Yes, operational number was okay. Commentary is incrementally better. But did it warrant a 6% move to your assessment?
Hi, Anisha. Thanks for having me. In particularly this case, if you looked at the numbers yesterday, of course, there was a miss on revenues. But the order booking was strong, as also the outlook for order booking going forward also was kind of strong. Given that, and given the granularity of orders, it looks like this is a sector which is going to see tailwinds. Also, if you look at the stock prices have held up reasonably well in the midst of all this volatility across the board. So this sector as a whole looks strong. Any positivity in this strength, in the leading company in this sector, will obviously be bought into by the markets, which is what we are seeing today. So there is justification for this move, and one would say that this sector has tailwinds going forward as well.
Anshul, hi afternoon. It's the quality of names which is actually cracking and coming under pressure that's getting a little alarming. That coupled with, that huge FI sell figure to the tune of about almost 7,000 odd crore rupees. I mean, these are some high HNI, FNI dominated blue chip counters and across market caps.
That is for me, Aisha.
Yes, that's for you.
Yeah. Hi, Aisha. So if you look at this month in particular, we have multiple key events which are likely to play out. One is, of course, the inauguration of the US president, whose tweets are already causing a lot of flutter in the markets, also whose commentary is causing flutter in the markets. Second, you also have this as the results season. Results have already commenced. And through this month, you will have activity on results. And third, the general economic activity in India, that also seems to be slightly weak running into this quarter. Given all of this, it looks like this is a period where we will see volatility. FIIs in the midst of all of this seem to be taking some monies off the table. Also, bear in mind that starting calendar year 23 till say the third calendar quarter of last year, we saw significant tailwinds in markets. Now, given so much profit, some money is being taken off the table. But long term, India is in a very sweet spot. We don't think that this is a permanent trend in earnings growth. Earnings has seen a seasonal slippage, but going forward, say in the next 1 to 2 years, earnings should rebound. In fact, even in the second half of the current calendar year, we anticipate that earnings will rebound. And given that, there should be positivity even in markets going forward. So this is seasonal, not permanent. That is how one should look at this sort of volatility in the markets.
Taken, so that's the view coming in as far as the market setup is concerned. But moving on to an ET Now exclusive, sources tell ET Now that the government is likely to hike the capex target by 10 to 12% in FY26 in the upcoming budget. Prakash, my colleague, is joining us with the latest on this one.
The next Union budget could see a modest increase in the capital expenditure target. We are learning from our sources that the government may take a rational approach before deciding capex numbers for the financial year 2026. In fact, various factors are being taken into consideration, and of course that include slower spending during current financial year. But the sources are indicating that the capital expenditure target is likely to be hiked by 10 to 12% for the financial year 2026. A very significant development coming in. However, a discussion is underway within the government, and any final call will be taken closer to the budget. As you are aware that the 2024 being an election year, capital expenditure target is little slower than the last year, but the government is hopeful to achieve 90% against the total target of 11.11 lakh crore, which is earmarked for the financial year 2025 on back of higher spending by various ministries in next 3 months. Along with that, key infrastructure sectors like railways, road transport and highways, housing may get 10 to 15% higher allocation. We also given to understand that the government is mindful about the fact that, gross market borrowing through dated securities may rise in financial year 2026 in order to meet repayment obligation. Therefore, all these factors will be taken into consideration. And the government will try to make better balance between fiscal prudence and capital expenditure target.
Right, okay, on that note, we're going to take a very quick break. Come right back. We'll continue tracking markets.